This is again a video on NISM certification exam 5B Mutual Fund Foundation. This is video 5 and here we are discussing factors to evaluate savings and investment product. And the factor which we are going to discuss here is factor 3, which is returns. Before we explain what the returns are, my question which I want to ask is, what is the purpose of investment? किस लिए हम investment करते हैं? And the answer to that would be that we do investment for returns. So if we do investment for returns, then what is returns? Returns are nothing but the earnings which your investment does. The earning is in terms of rupees, which makes your investment to yield some returns, or earnings which give you some yield on your investment. So returns are nothing but earnings which you have because of your investment in XYZ product, XYZ financial instrument, or real estate physical instrument like real estate or gold. Now the next question which comes into mind is, are there any types of returns which we are talking of? Yes, there are two types of returns which we talk of. One is called as regular or periodic returns, another is called as capital appreciation. When we talk about regular or periodic returns, we are talking about returns which come after every fixed period of time. In this example, here we are using an example of an FD interest. Suppose interest comes after every 3 months. This is the money which comes after every 3 months. 3M means 3 months. So there is a quarterly return which happens, and since it happens every quarter, we call it is periodic or regular in nature. And return is the money which your investment earns, the money which the FD earns, which is the interest which comes out of an FD. Similar is the case with the bonds or G6, government security. G6 stands for government securities. Here the returns are semi-annual. That means twice in a year, after every 6 months, you get the returns. So this is a semi-annual return. A quarterly return is what we have shown above. Semi-annual is what you get in bonds. There could be a term called as annual returns. That means once in a year you get the returns. That is annual returns. Now the second point is, what is the second type of return? The second type of return is what we call as capital appreciation. Capital appreciation. Appreciation means growth. Capital means मूल. मूलधन की वृद्धि अगर हो रही है, that means if there is a growth which is happening in capital, that type of a return is called as capital appreciation. For example, we invest 1 crore in equity shares, and this 1 crore of equity shares in 6 months becomes 1.5 crores. So this 50 lakhs which is increased or added up to your 1 crore of your value is called capital appreciation, or the appreciation which has happened to your capital. Similar example is the case with the house, wherein you have a house, you sell that house, the proceeds of that house can be twice, thrice, 4 times or 10 times of what you have invested, had it been a 30-year long investment. So that is that 30 times growth in your capital is your capital appreciation. Capital appreciation and regular income or regular returns are called with different names also. Let's look at that. Regular income or periodic income returns are called as current income. Current means abhi ki income kya hai. And capital appreciation is also called as capital gains. Capital word is same. Instead of appreciation, the word is gain. Gain means munafa. मेरे मूलधन में क्या मुनाफा हुआ? So we can use the word capital gains interchangeably with capital appreciation. Instead of regular or periodic returns, we can use the word current income. So don't get confused. Now the third point which comes into picture is that current income is possible without selling the investment. Suppose you have a government bond of 1 crore rupees. You don't have to sell that government bond. Every semi-annually, that is after every 6 months, one interest will come, and then a similar amount of investment returns will come after the next 6 months. So there is a semi-annual payout which is happening in government bond. The government bond lies with you for next 10 years, 15 years, as long as you want to keep. So we are not selling our government bond, but we are getting our returns from it every year, every half yearly, monthly, quarterly, semi-annually, whatever the case may be. But in case of shares, you have bought some and you have sold, then only you got 50 lakhs of gain. In case of a house, you bought a house and you sold the house, then you got a capital gain in it. So this type of a return happens when there is a sale of investment which happens. Now, this is all for this video. In the next video, we will cover factors to evaluate savings and investment product, and the factor would be convenience. Thank you.